Hi guys, welcome back to the Bitcoin briefing, and today we're breaking down two big things: the recent dip in Bitcoin's price and how it ties into the bigger picture, the global money supply, specifically the M2 global money supply. By the end of this video, you'll see why Bitcoin's price action makes more sense when you zoom out and compare it to the trillions of new dollars, euros, pounds and yen created worldwide every year. So with that said, let's jump into it. Bitcoin recently pulled back from its highs, sparking fear and headlines calling it the end of the bull run, potentially the onset of a bear market. So you can see that we pulled back from approximately 123k to right now we're at about 111k, so a 12k difference, 10% over a period of about 2 weeks. Short-term corrections in Bitcoin are extremely normal. Bitcoin has always been a very volatile asset, but that's where its true strength comes from. Historically, it's seen 20 to 30% pullbacks, like for example the one we saw earlier this year when we went from a peak of around 110k to right down to the bottom to 75k. So a 31% drawdown there and $34,000 wiped off your portfolio if you have one Bitcoin. So you can see why investors may get a bit antsy if they're not aware or not convicted and not done the research about what it is they hold. This current dip, as we identified before, around 10%, is driven by a mix of profit taking, uncertainty in global markets, and tighter liquidity. It's also driven by the decision on the federal rate cuts, which during the latest Federal Open Market Committee meeting, the interest rate was held steady. Many investors therefore have lost hope of any interest rate cuts in the near term, and therefore this uncertainty has led to Bitcoin and many other speculative assets being impacted on the downside, and therefore we've seen this dip. But here's the key: the bigger story isn't the dip, it's the money supply. M2 money supply is basically all the cash, checking deposits, and easy accessible savings in the system. In other words, the amount of money floating around the global economy. Since 2020, global M2 has exploded. Trillions of new units of currency were created to stimulate economies, bail out banks, and support governments. When the money supply grows, the purchasing power of each unit falls. That's inflation. Here's where Bitcoin comes in. Bitcoin has a fixed supply of 21 million. It doesn't inflate with government policies, central bank decisions, or election cycles. Compare that with global M2, which is growing around 5 to 7% per year on average. In some countries, much faster. Over the long run, Bitcoin's scarcity stands in direct contrast to the ever-expanding money supply of fiat currencies. This is why dips in Bitcoin price are often just noise compared to the bigger macro trend. Fiat supply is expanding, Bitcoin supply is capped. Historically, Bitcoin drawdowns have shaken out short-term speculators, while long-term holders keep accumulating. Every dip has looked like the end to some, but zooming out, Bitcoin has kept tracking upwards over cycles, largely because fiat keeps losing value. If global M2 continues to expand, your dollars, euros, and pounds will buy less and less each year. Bitcoin, on the other hand, can't be printed. That's why many investors see dips as discounts rather than disasters. The recent dip isn't about Bitcoin being broken, it's about short-term market cycles against the backdrop of ever-expanding money supply. Bitcoin is volatile, yes, but it's also the only asset which absolute scarcity in a world where M2 money keeps climbing. So while the headlines focus on the dip, the bigger question is how much new money is being printed and what will that mean for your savings in 5, 10 or 20 years. Thanks for watching. If you found this breakdown helpful, hit like, subscribe and drop a comment. I'd really love to know your insights into Bitcoin, where your price predictions lie, and what your long-term aspirations are in terms of your financial independence. Thanks for watching and see you next time.